don't go out and fight with them, because they're literally mercenaries paid to do this. Don't spend your time trying to convince them otherwise. They were paid to have a certain opinion, right? That's their job, to have that opinion. And we saw that, in a number of crypto wars,
Yeah.
When Greenpeace and the Sierra Club were paid to decide that Bitcoin was not environmentally friendly. You're not going to convince them otherwise. It's not an honest transaction or an honest reaction. It doesn't come from any, from any place of honesty. It was literally paid protest. And so I'm hopeful the society will look at the consequences of paid protest, and they'll take a step back.
Hey guys, welcome to Everyday Finance. Despite the red flash on the Bitcoin chart, traders continue to pour in as if nothing were wrong. Despite the overwhelming chorus of buy the dip, there are caution signs all around. Convinced that it was just another shakeout, traders hurried to restore long positions following the year's most violent liquidation, which cost $1.7 billion. A more dire picture is presented by High Block's volume delta, which shows that sellers continue to control the market and crush any rebound as leverage rises to risky heights. The liquidity is rapidly decreasing. Near $17,000, a trap awaits gamers who are overly leveraged. Real conviction is disappearing. Futures are controlling the market, and spot demand has diminished. Although open interest appears to be high, it is only a late-cycle mirage that conceals fragility in the absence of actual purchasers. Every rally feels like a setup for the next flush, and every bounce like bait. Despite this, whales and retail continue to the violent emergence of Bitcoin's next era, or its unraveling. For further clarification, let's examine Michael Saylor's astute market observations. Remember to subscribe, like, and enable notifications for more in-depth analysis.
I think my message would be that we actually all have a lot more in common, and we agree on a lot more things than the mainstream media would lead you to believe. So, for example, if we take just the Bitcoin community, oftentimes we have very divisive debates in the Bitcoin community between one set of Bitcoiners and another set of Bitcoiners. And when I go online, it could be very toxic and very colorful, very passionate, and people get so worked up. Sometimes they get massively angry at me. They get, one set of developers get massively angry at another set of developers. And I think the irony is that we agree on 99.9% of everything. And when you dig a bit deeper, what you find is that the inflammatory messages tend to run harder. Lies run harder than truth. Extreme positions run harder in cyberspace on X and through the ecosystem. And, even I notice in times of success, like just of late with our company's never been more successful. And yet the amount of hate and toxicity that gets posted online has never been greater. And then I'll drill down on some of these, on the people posting, all the negativity and the hate and the criticism. And here's what I see oftentimes. I see it's a person that's never interacted with anybody before, and they have 328 followers, and they share none with me. And I look a little bit, and I'm like, this is not even a person. Mm-hmm. This is a bot. And it turns out, I think, that a lot of the toxic, inflammatory behavior online is actually cyber marketing or guerrilla marketing. Like a short seller in my stock has actually paid a digital marketing organization to spin up a bunch of bots to post a bunch of nasty, awful, skeptical cynicism because they think it might work. And it's very transparent to me that someone paid some money to create the appearance of a protest.
Wow.
And I think if you take this in the political realm, same thing. A lot of times the political inflammation is someone paid a digital bot to create the appearance of unhappiness.
To manipulate us.
A lot of times I think in our country, a lot of protests are paid protests. Someone actually spent money to hire someone to go and protest. And it's a hired, paid for protester. And then what happens is the mainstream media will put the camera on the paid protester, or they'll put the camera on the fake bot, and they'll say, people are up in arms in cyberspace, or they're up in arms in such and such. And they'll put that in front of millions of people and create the appearance of societal dysfunction, unhappiness. And unfortunately, right, if you actually take a fake protest and you amplify it enough, you may convince 1 out of 10 million people to violence, and then it becomes real and it becomes a tragedy and it's awful. But my message to everybody is, I think this might be the tragedy. The Kirk affair might be the tragedy that causes people to realize that there are actually some dysfunctional systems in our society that are in the business of creating inflammation. They're actually creating their divisive systems of amplification. And in fact, the people can be brought back together with a little bit of surgery. Find the amplified sources of divisiveness and turn them off, right? Mm-hmm. Turn off the amplifiers of toxicity. And then the other part is just the recognition. It's like, if you read 37 negative comments, you think everybody hates you. Mm-hmm. It's like online, I read things, I think everybody hates everything that I'm doing. And I go out in the real world, I've never met anyone, right, that was unhappy. Like you're like, how come the people in the real world seem so happy and the people online seem so unhappy? And what you're seeing is the cameras, there's a phrase, if it bleeds, it leads.
Yep, I knew it in news.
Right?
Yep.
So the cameras are looking for the civil unrest. Mm-hmm. But my message is the civil unrest is being paid for, right? I think that there are actors that create the civil unrest in cyberspace. They create it in the real world. Then there's unhealthy media that magnifies and amplifies it. And I think the general population is kind of sick and tired, and they're getting more and more aware, right? Like the growing distrust of all of these systems, is an immune mechanism kicking in place. I think generally this is going to catalyze a lot of positive behavior and a lot of constructive humanitarian engagement. And I'm very confident and I'm optimistic over time we'll find our way to a healthier world and a healthier body politic. But it starts with not believing everything you're told, not believing everything you read, thinking for yourself, right? And then I think there is a place for you to recognize when you've got 187 bots in your stream that are amplifying toxicity. Don't engage with them. Don't feed the trolls, because just like when there's 52 paid protesters on your street corner and they were paid to be there, don't go out and fight with them, because they're literally mercenaries paid to do this. Don't spend your time trying to convince them otherwise. They were paid to have a certain opinion, right? That's their job to have that opinion. And we saw that, in a number of crypto wars,
Yeah.
When Greenpeace and the Sierra Club were paid to decide that Bitcoin was not environmentally friendly, you're not going to convince them otherwise. It's not an honest transaction or an honest reaction. It doesn't come from any, from any place of honesty. It was literally paid protest. And so I'm hopeful the society will look at the consequences of paid protest and they'll take a step back.
Michael Saylor clearly addresses the bearish noise, reminding everyone that the volatility of Bitcoin is a normal aspect of its rhythm and not a defect. Real assets expand through consolidation, pullbacks, and booms. He draws attention to the obvious. In just a year, Bitcoin has almost doubled in value. That is progress, not weakness. Since they are unable to borrow against their holdings at this time, early adopters are selling to diversify or cover expenses, which is what caused the recent decline, Saylor adds. He claims that the selling pressure is beneficial since it shifts Bitcoin from individual to institutional ownership, strengthening and stabilizing the base. Saylor sees this as maturity rather than stagnation. He also criticizes the fixation on cash flow in traditional finance. Nobel Prizes, gold, and real estate all have worth, even though none yield. He contends that Bitcoin is the purest form of money, because it is a direct store of wealth and energy, rather than having any utility value. Legacy investors continue to act as though the financial world hasn't changed. Holding on to equities and bonds like it's 1971, Saylor observes that the change is already in progress. Bitcoin is not only surviving but thriving in crumbling economies where money dies and savings disappear. Providing stability and confidence where traditional institutions fall short. Let's take a closer look at Saylor's compelling interview and the roadmap he puts forth for the future of Bitcoin.
A preferred stock is a second class of stock other than common. Common stock is you're just the final owner of the company, and you don't really have any particular preferences. You don't get any particular guarantees from the company. But if you create a preferred stock, that stock can be given a dividend yield. We can say that stock's going to pay this dividend monthly or quarterly, or it's going to pay a dividend that floats with SOFR. It could pay a fixed dividend. It could pay a variable monthly dividend. So you can give it certain cash flows and certain yielding rates. The stock can also have conversion rates. So you can say, hey, this converts to 1/10 of a share of my common stock, or 1/5 of a share, or it's fully convertible. So you can give it any amount of equity upside. You can give it any amount of yield. You can give it liquidation preferences. You can make it senior, and you can give it guarantees like it's a cumulative preferred dividend. So if we miss our dividend, we'll accumulate it. Or you can give it penalty. You can say if we miss it, we'll pay you a penalty. You can pretty much write anything into the share that you like. So there are many different types of preferred stocks. It's a generalized container. Generally, it's different than a debt instrument because a debt the principal has to be repaid at some point certain. You could make it more debt-like if you said, hey, the holder has a put right to put it back for cash. And you could make it look more like a debt instrument if you wanted, or if you basically give the holder the right to get all their cash and principal or to redeem it. If you gave it a redemption right at some point, that would look a lot more like debt. Or you can make it look a lot more like equity if you said it's non-cumulative, like Stride is non-cumulative. So the principal never comes due and the dividend could be suspended without a penalty or without an accumulating liability over time. So you have extremes from very, very debt-like preferreds to very, very equity-like preferreds, everything in the middle. And that just makes it a very flexible security for a public company to issue. Now, if you happen to be a public company and if you have a lot of Bitcoin, then you could create this security and then you could take it public. So the first innovation is to create a preferred. The second innovation is to take it public and then you IPO it on like a 4-letter ticker, like STRC. And the third innovation would be if you do take it public, you might put a shelf registration against it. And in that case, that means you might sell $1 billion of it up front, but then you might sell 50 million a week or some amount of it continuously, almost like an ETF gets bigger, like IBIT got bigger because every single day capital flows into it and they increase the number of shares of an ETF. So when you create a preferred that's got a shelf registration that's public, you've almost created a kind of proprietary ETF, right? You've created a new financial creature. It's got all the benefits of an ETF, but it's got also the benefits of a proprietary asset because you're creating the credit instrument in real time as opposed to, I collect someone's money and I'm running a junk bond ETF and I have to go and I have to buy a bunch of junk bonds. So an ETF provider has got a wrapper on someone else's assets. But when you create a digital credit instrument, as a preferred, you're actually creating a native instrument back integrated all the way to the Bitcoin. And so
over collateralized.
Yeah. And then in that particular case, you could create a preferred that is 10x over collateralized that pays 10% dividend and it pays that forever, right? That would be an instrument and just say, that's what I'm going to sell. And I can sell a certain amount of that.
Beyond Bitcoin as an asset, Michael Saylor has a big vision for how it will revolutionize the entire credit system. He believes that the conventional debt markets, which include government notes, bonds, and mortgages, are dysfunctional due to their low returns, high risk, and brittle trust. Bitcoin defies that concept by increasing more quickly than the S&P 500. Saylor sees a time when old bonds are replaced by credit instruments backed by Bitcoin, which provide better rates, reduced risk, and unparalleled liquidity. While some of these assets behave like stock, taking on more risk for higher gain, others may resemble classic bonds, which are senior and stable. He thinks that even money market products based on Bitcoin might provide consistent monthly dividends, with yields as high as 12.7%. According to Saylor, this is more than just financial innovation. It's a new basis for international credit. With Bitcoin serving as the anchor for equity and lending and drawing in money from all around the world, he acknowledges that the path ahead is lengthy. Giants like the S&P 500 are slow to adjust, and traditional finance moves at a snail's pace. However, he is encouraged by the fact that the number of treasury businesses that own Bitcoin increased from 60 to 185 in a single year, indicating that the change has already started. Saylor's message, however, transcends markets. He refers to Bitcoin as a non-violent revolution, a means of destroying corrupt structures, combating inequity, and bringing back the truth in a time of deceit. He cautions that the indignation and mayhem that are sweeping the internet are frequently manufactured. It's fueled by paid actors and bots designed to sow division. His message is straightforward. Think for yourself, ignore the distractions, and concentrate on what brings us together. Saylor predicts a digital gold rush in 2025 to 2035, a decade of innovation, opportunity, and rebirth. He thinks that Bitcoin can unite people and restore order to a chaotic planet. He sees this as a human evolution rather than only a financial one. We appreciate your time, and please remember to like, subscribe, and return soon for more insights from Michael Saylor's innovative vision.